Hey Jerry, I saw that the Fed left rates unchanged this past week, but what exactly does this mean and how can this impact me if I'm thinking about buying a home in the future? Interest rates right now is the ultimate hot topic in our industry, so let's talk about it here on the other side. Hi friends, it is Jerry Kolich here from National Mortgage Center, powered by Stride Bank. And today we're going to discuss the Fed rate and how that can have an impact on mortgage interest rates. But first off, what exactly is the Fed rate? The Fed rate is the rate the Federal Reserve will establish that banks can borrow money and then ultimately loan this money back out. The Fed will lower this rate or raise this rate, basically trying to influence the economy. So if they're trying to say, for example, right now, curb inflation, they raise this interest rate, things are more expensive to purchase, and will ultimately start to curb that inflation number. Vice versa, if they're trying to stimulate the economy, you're going to see them lower this interest rate, make things more affordable. This rate will have a direct impact on short-term rates and loans. So think about things like your savings account or CD or a car loan or even an adjustable rate mortgage. But as far as long-term interest rates, those are influenced by a number of things. Things like the 10-year Treasury bond, the supply and demand of these bonds, market sentiment, and yes, the Fed rate. And so what will happen is we will start to anticipate what we think the Fed decision will be. Over the past couple years, the sentiment has been that they're going to raise these interest rates to curb inflation, and you have seen mortgage interest rates increase. Right now, the sentiment is that we may see a lowering of this rate, hopefully at the end of 2024 and into 2025. So the news that we received earlier this week that they left things unchanged, but they're looking to potentially lower rates at the end of this year was received well in this market. And you've seen interest rates go down just a little bit. But ultimately, the impact that the Fed rate has with mortgage interest rates, while it's not necessarily direct, it is significantly indirect and has a major influence on what happens in the mortgage market. You will basically see mortgage rates rise and fall with the Fed rate. Guys, we appreciate you watching this video. Like it, share it, especially like our page if you want to get more of this content. If you have other questions, feel free to reach out. You can call our toll-free number 855-699-1424 or visit us online at nationalmortgagecenter.com. Submit an inquiry and one of our loan officers will be right with you and can answer any questions that you may have, because here at National Mortgage Center, powered by Stride Bank, we always love to help. We always love to educate so you can have an amazing home buying experience. Take care.